So today is the first installment of Bad Arguments. And in this case, we want to look at one consideration that's being advanced against Bitcoin. So if it's not a bad argument, at least it is, let's say, an uncompelling consideration. At least that's what I hope to demonstrate today. And this one comes from Jamie Dimon when he says that Bitcoin is, quote, worthless. Now, who is Jamie Dimon? He is the head honcho of JP Morgan Chase, one of the largest investment banks in the United States and indeed in the world. But in fact, this same charge that Bitcoin is worthless also has been made by Charlie Munger, who is known as Warren Buffett's right-hand man at Berkshire Hathaway. And according to CNBC, Munger once stated that Bitcoin is worthless and he likened it to artificial gold. As for Jamie Dimon, he expanded on the notion that Bitcoin was worthless by saying that, quote, it has no intrinsic value. Strictly speaking, I'm not sure that we would consider this to be an argument of any kind. So it couldn't be a bad argument if it's not an argument at all. Clearly, he's making a claim. He's asserting something to be true, but it's not clear that we should understand this to be an argument. An argument is usually construed to be a set of sentences, some subset of which, called the premises, have a special relationship with a further subset called the conclusions, and usually that relationship is referred to as entailment. So if you accept the premises, you have to accept the conclusion. At least that would be the case in a deductive argument. So it's not clear that Jamie Dimon or Charlie Munger are advancing an argument of any kind, unless you think that Jamie Dimon is saying Bitcoin has no intrinsic value, therefore it's worthless, and that's his argument. We'll examine some of this, but it's probably best to just see those two claims as virtually synonymous. He's saying that Bitcoin is worthless, and he's saying that what he means by that is it has no intrinsic value. So intrinsic value is an important part of the Dimon-Munger consideration. So what does it mean? Well, it shows up in two contexts. The first context is in business and economics. Here, intrinsic value is clearly qualitative, and it is typically contrasted with extrinsic value. Now, in business and economics, the extrinsic value is more quantitative. So an example of that might be if you and your friend want to make a bet as to what ant is going to cross your windowsill first. There's no real deeper significance to that event. There's no inherent value. There's no qualitative value to that ant behavior or anything like that. But if you can make a buck betting on that, then it has some value for you, but let's call that extrinsic value. But what we're concerned with here is something that's not extrinsic, but getting a fix on it is a bit difficult. So for example, Investopedia speaks in one place as if intrinsic value, at least for a company, is, quote, the sum of all the company's assets minus its liabilities. But on this definition, it makes intrinsic value virtually synonymous with what is usually referred to as equity. More typically, the intrinsic value is contrasted against equity or other features that an asset can have, for example, its market value. And often this calculation, this determination of intrinsic value is based on something referred to as fundamental analysis. Now, I'm not going to get very far into actually investigating what that is or how to perform it. However, suffice it to say that Warren Buffett is one of those people who has made this type of analysis fairly well known. And Warren Buffett based his practices, at least in part, on a book by Benjamin Graham called The Intelligent Investor. And in the book, Benjamin Graham speaks of comparing a company's intrinsic value against its stock value, as it might appear on the Dow Jones Industrial Average, for instance. So Warren Buffett's method of fundamental analysis involves determining this intrinsic value first. And you do this by analyzing a number of what are termed business fundamentals, including how much does a company bring in, how much cash does it have on its balance sheets, how many liabilities does it have, and so forth. And then you compare your calculation of intrinsic value to the value of the company, for example, again, on some kind of a market index. What's its stock worth? So to analyze fundamentals, number one is done in order to determine their intrinsic value, and then you compare this to their market value. What you're looking for are companies, stocks, assets that are, quote, undervalued, meaning that their intrinsic value in your estimation is greater than their market value, meaning they make it a deal for you to buy them because they're undervalued from the standpoint of the market. Now, this is referred to sometimes as value investing. And on this Benjamin Graham / Warren Buffett approach, there is an underlying assumption that the intrinsic value and the market value are going to come together at some point in time, and that's often referred to as the principle of convergence. Without getting too deep into the weeds, the fundamental point here is that you could understand what Jamie Dimon and what Charlie Munger are saying to basically be this, that on some fundamental analysis, Bitcoin has a value of 0. So it doesn't matter what its market value is. If its intrinsic value is 0, it's never a good idea to buy it. Now, the problem with this is multiple. First of all, according to Investopedia, the calculation of intrinsic value is extremely difficult, especially when it comes to cryptocurrency. It's not clear how to perform that calculation. So this is the first problem. Calculating Bitcoin's intrinsic value is very difficult to do. And one reason why it's difficult, or thought of from a different perspective, one outgrowth of its being difficult, is that there are several different ways to make that calculation. So the second and related problem is that there are different ways to perform a calculation for intrinsic value. Investopedia calls these competing approaches. And without sketching the particulars here, we'll just note the first one is supply and demand. The second is called the stock-to-flow ratio. Other authors refer to this as the hardness factor. How hard is Bitcoin compared to other forms of money? The third way is expected value, making a guess as to how much that value is going to be in the future. The fourth is cost of production. How difficult is this particular asset to create? And the fifth is something called network value. The point here is that Jamie Dimon's charge that Bitcoin is worthless. If we understand it to be pertaining to some kind of fundamental analysis, then what we have to ask ourselves is, which of these is Jamie Dimon using in order to arrive at the conclusion that Bitcoin's intrinsic value is 0? And there are really two options, it seems to me. First of all, he could be saying that regardless of the method you select, Bitcoin will be determined to have a 0 intrinsic value on every way of performing this calculation. In other words, no matter which one you select, supply and demand, stock to flow, expected value, Bitcoin always comes out as having 0 value on any of those calculations. And the second way is he's saying that on at least one of these approaches, Bitcoin's value is calculated to be 0. But in none of the articles that I consulted were we even given a single illustration of how one of these calculations shows that Bitcoin equals 0. So in other words, there are 5 different ways to perform the calculation of intrinsic value on fundamental analysis, and we're not even given one that shows Bitcoin equaling 0, let alone given 5. We're certainly not given 5, but even if we were given one spelled out calculation in which Bitcoin equals 0, it wouldn't show that on the other 4 competing ways of evaluating Bitcoin, it would also equal 0 on those other 4 ways. So in other words, we're not given any support for this claim whatsoever. And here it's worth pointing out that other commentators certainly appear to think that Bitcoin does have some value, and we would presume at least a few of them, perhaps Michael Saylor, the CEO of MicroStrategy, have carried out one or more of these other calculations and determined that Bitcoin does have positive intrinsic value after all. Now, an alternative to fundamental analysis would simply be to say that intrinsic value is whatever it is that makes a certain thing unique. So the uniqueness of something is its intrinsic value. But if Jamie Dimon and Charlie Munger are saying that Bitcoin has no intrinsic value, maybe what they mean then is that Bitcoin has no unique properties. So is that true? Is it true that Bitcoin has no unique properties? Well, it seems not. There are a number of properties that have been associated with Bitcoin, including its ability for people to possess it anonymously, for you to transact business without being traced, resistance to regulation, and so forth. Now, to be sure, sometimes these properties are referred to as anarchic properties, and they're often used by people who are trying to disparage Bitcoin or to say it's not worth using or purchasing, it's not worth having, maybe we should even outlaw it if we can. And so these properties are controversial, but certainly they're properties that seem to be unique. But aside from these, Bitcoin also has somewhat more positive qualities, including its decentralization, its efficiency at transacting business, the fact that it's limited in amount, in theory, is going to be a protection against inflation. It's also secure. in a way that other types of money, other types of transaction are not. So these at least seem to count as unique properties. But then we should take a step back, because the statement that Bitcoin has no value in logic would be referred to as a universal negative. And in logic, a statement like that, a universal negative, is contradicted by a particular affirmative, meaning that Bitcoin has some value is enough to show that Bitcoin has no value is false. And if even one of those candidate unique properties pertains to Bitcoin, then it seems that the idea that Bitcoin has some intrinsic value, at least in terms of having some unique properties, is a defensible statement. Now, the second context in which the phrase intrinsic value is used is going to be a more philosophical context. It's often used in ethics, for instance. And here it refers to value that a thing possesses inherently. Or another way of saying that is intrinsic value is the value that something has in and of itself, irrespective of anything external. Now, some examples of this are flourishing, or happiness, or health. In other words, it is not typical for somebody to think that health isn't valuable in and of itself. It's natural to think that being healthy is simply a good thing in and of itself. On the other hand, intrinsic value in a philosophical context is once again contrasted with extrinsic value, but here it's more that we're thinking of instrumental value. Now, to get a sense of what that means, we can turn to an article on intrinsic value published in Philosophical Studies in the year 2001. And in that article, we read that instrumental value is typically defined as value that is used as a means to some other end. In other words, if something has instrumental value, then it's not valuable in and of itself. Rather, it's valuable because of what you can get from it or what you can use it for. And the most typical illustration of this that you'll find in the literature is money. Now, we can go one step further than this. If we turn to Shelley Kagan's textbook, Normative Ethics, we actually learn that money is not just an example of something with instrumental value, but it's generally thought of as something that only has instrumental value. In other words, if something is only instrumentally valuable, then it is not intrinsically valuable at all. So not to put too fine a point on it, but the standard view is that money has no intrinsic value. Whatever value money has is simply due to its use. Its use. It is an instrument, not something intrinsically valuable. But this means then that money of any kind lacks intrinsic value. No kind of money has intrinsic value. And therefore, it's not surprising if we turn to Investopedia, that Investopedia writes straight out, quote, fiat money has no intrinsic value. Now, what is fiat money? Well, if we go to the Oxford Dictionary, we can look up fiat money and we read that fiat money is money that a government has declared to be legal tender, even though it has no intrinsic value. But then this means that the US dollar as a kind of fiat money would also lack intrinsic value. Max Kaiser, well known in internet circles, at least as a proponent of Bitcoin, has stated the US dollar has no intrinsic value. And this point is not unique to Max Kaiser. For example, Wired.com ran a story in 2017, the title of which was, Yes, Bitcoin has no intrinsic value, but neither does a $1 bill, or a $100 bill for that matter. But maybe none of those sources are persuasive to you. How about the St. Louis Federal Reserve Bank? In an article titled 3 Ways Bitcoin is Like Regular Currency from 2018, we read that one of the ways is that Bitcoin and cash both have no intrinsic value. Now, this isn't a video about gold, so I don't want to get too far into this topic. It is noteworthy, I think, that a representative of JP Morgan has stated that gold has no intrinsic value either. This is interesting to me because we do see in other of his statements that Charlie Munger does seem to be drawing a rather close connection between gold and Bitcoin, because he says, since I never buy gold, I never buy any Bitcoin. So he does seem to be consistent with respect to gold and Bitcoin. However, it seems arguable that he's a bit inconsistent when it comes to dollars, when it comes to cash. Berkshire Hathaway loves its cash. It has a huge stockpile of cash, even though cash has no intrinsic value. And this same inconsistency, frankly, seems apparent with Jamie Dimon's JP Morgan, because just as with Berkshire Hathaway, JP Morgan is also, quote, hoarding cash. And as of June of 2021, apparently they had some $500 billion in cash, once again, even though the dollar has no intrinsic value. So they don't seem to be concerned with a lack of intrinsic value when it comes to the dollar, but somehow they are concerned with it when it comes to Bitcoin. it seems a bit inconsistent. So in summary, is Bitcoin worthless? We have to take a position on what constitutes value or worth. So if we think that intrinsic value is bound up with what is referred to as fundamental analysis, then the thing to say here would essentially be that there are 5 different ways to analyze business fundamentals, at least 5 that Investopedia mentions. And it seems to me implausible to think that Bitcoin's intrinsic value is 0 on all 5 of these ways of performing the analysis. On a somewhat separate but related trajectory, if we think of intrinsic value as some constellation of properties that something has uniquely, then the idea that Bitcoin would be worthless has to mean that Bitcoin has no unique properties. But this just seems false. Bitcoin has numerous qualities that have been proposed as unique properties. And without repeating everything we said earlier, again, this might include its decentralized nature, its enforced scarcity, and other things beside. Now, finally, on a somewhat separate trajectory, if we think of intrinsic value as being opposed to instrumental value, then indeed we might think, yeah, Bitcoin on a philosophical analysis then, strictly speaking, is an instrumentally valuable good and therefore would lack intrinsic value. But we would hasten to add that this is no different than the US dollar. It's no different than gold. All of these, on a philosophical way of thinking, have instrumental value rather than intrinsic value. And so Bitcoin is no worse off than any of these other types of money. Now, finally, let me say something about the idea that value judgments might be subjective. Now, I'm not a subjectivist, but if a person were a subjectivist about value, then the important thing to remember here, Charlie Munger and Jamie Dimon have opinions, but on a subjectivist view, these opinions should carry no more weight than somebody who has opposite opinions, somebody like Michael Saylor, for example. And relatedly, and maybe even more importantly, on a subjectivist view, Jamie Dimon's opinion, Charlie Munger's opinion, shouldn't constrain you in any way. If you're a subjectivist about value, then you would think that you have just as much of a right or just as much of an ability to make a value assessment about Bitcoin than any of these people, and what they've said about it is irrelevant. But maybe you think it's relevant simply because they have more competence maybe than you have. So if you're worried about that idea that they're competent to perform this analysis and maybe you're not, and we want to ignore for a minute people like Max Kaiser or Michael Saylor who are clearly Bitcoin enthusiasts, then maybe this additional consideration would be of interest to you. One of JP Morgan's main competitors in the investment banking space is Goldman Sachs. It is interesting then that in 2018, the then CEO of Goldman Sachs said that it was, quote, arrogant to dismiss Bitcoin. Now, of course, the CEO in 2018 was Lloyd Blankfein, but this idea that Bitcoin might be worth a second look is repeated by the person who took over for Blankfein, namely David Solomon, such that Forbes was able to write in July of 2018 that Goldman Sachs' new CEO is keen on Bitcoin and crypto.